What does freedom look like to you? Maybe it's covering your rent without worrying, saving for something big, or just having room to breathe financially. Whatever your vision is, the key to achieving it is creating passive income. In this video, I'll show you and John 5 incredible stocks that can help you escape the paycheck-to-paycheck cycle and start building a second source of income. I'll show you how soon these stocks will help you pay your rent. I'll show you my top pick that cuts in half the time to reach the goal. And in the end, I will show you how you can combine these stocks to pay faster than almost all the others while still staying on the safer side. Let's talk about why monthly dividend stocks can be a game changer, because this could be the key to unlocking your financial goals. Think about this. Rent is one of the biggest financial stressors for most people. That massive bill comes around like clockwork, eating up a big chunk of your income. But what if instead of scrambling to cover it, you had a reliable stream of income to help out? Here's the goal: to build a portfolio that generates $3,000 a month in passive income. At first, that might sound impossible, but the secret is consistency, time, and the power of compounding. And I'm going to show you how to reach it with a $90 a week investment strategy. Next up, I have 5 stocks ranked by how quickly they can help you reach $3,000 per month in dividends, starting from number 5 all the way up to number 1, which cuts the time by half. Number 5 on my list is Main Street Capital Corp. with the ticker symbol MAIN. This is a company that helps small and mid-sized businesses by giving them the money they need to grow. Main earns income through interest payments and by owning small parts of these businesses, which allows it to pay investors regular monthly dividends. It's a popular choice for people who want both steady income and long-term growth. Because Main invests in a variety of industries, it's considered stable and reliable. Main has a 7.2% dividend yield and a 3.86% annual dividend growth rate. With an average share price growth of 5.3%, it offers both steady income and long-term portfolio growth. Here's how it works. If you invest $90 a week and reinvest all your dividends, you'll see your investment grow significantly over time thanks to the power of compounding. By the end of the first year, your portfolio matches your contributions at $4,680. Fast forward to year 10, and the portfolio will grow to $81,716, generating approximately $363 per month in dividends. By year 20, it will reach $313,225, paying about $1,269 per month. At the 30-year mark, your portfolio climbs to an impressive $914,132, with monthly dividends reaching $3,256, hitting the goal of paying rent 30 years from now. Over 30 years, the total value added to your portfolio is $773,732, with $389,693 coming from share price appreciation and $384,039 from reinvested dividends. Number 4 on today's list is Realty Income Corp., known by the ticker symbol O. Often called the monthly dividend company, it's a real estate investment trust, or REIT, that owns and leases commercial properties to dependable, high-quality tenants. This means it provides a steady and reliable stream of income for investors. With a long history of paying consistent monthly dividends and strong performance, it's a top choice for building passive income. Realty Income's reliable payouts, steady growth, and solid real estate investments make it a great option for anyone focused on earning regular income from dividends. With a dividend yield of 5.95% and a dividend growth rate of 3.9%, Realty Income balances stability with steady growth. Additionally, its 3.2% average share price appreciation adds further value for long-term investors, making it a compelling option for those who want both income and growth in their portfolio. Here's what happens if you invest $90 a week and reinvest all of your dividends in this stock. By the end of year 1, your portfolio will have $4,680, matching your contributions. By year 10, the portfolio grows to $72,511, generating an annual dividend income of $3,923, or approximately $327 per month. As the reinvestments and compounding gain momentum, the growth becomes more substantial. By year 20, the portfolio value climbs to $258,509, producing an annual dividend income of $15,611, or about $1,306 per month. The key milestone of hitting rent income is reached in year 28, when the portfolio value rises to $616,747, and the annual dividend income grows to $39,830, translating to approximately $3,319 per month. Now later on, I will show you and John my top pick that cuts this time in half to reach the goal. And in the end, I'll show you how you can combine these stocks to pay faster than almost all the others while still staying on the safer side. Number 3 on my list is Wisdom Tree U.S. High Dividend Fund. DHS is a diversified exchange-traded fund designed to focus on high dividend-paying U.S. companies. Unlike individual stocks, DHS spreads its investments across a wide range of industries, reducing the risk tied to any single sector. This makes it a favorite among income-focused investors who want consistent monthly payouts without having to actively manage a portfolio. DHS primarily invests in companies with a strong history of paying dividends, offering investors not just reliable income but also the potential for long-term capital growth. It's particularly appealing because it balances stability with performance, making it an excellent choice for both new investors looking for simplicity and experienced investors seeking diversification. DHS offers a dividend yield of 3.67% and a dividend growth rate of 6.66%, ensuring that your income increases steadily over time. Additionally, its average share price appreciation of 2.25% adds to its appeal by combining regular payouts with capital growth. Here's how the numbers work if you invest $90 per week into this monthly dividend stock. By the end of year 1, your portfolio value matches your contributions at $4,680, with dividends beginning to add incremental growth. By year 10, the portfolio grows to $64,853, generating an annual dividend income of $3,025, or approximately $252 per month. The reinvestment effect becomes more pronounced as time progresses. By year 20, the portfolio value rises to $229,142, producing an annual dividend income of $16,913, or about $1,409 per month. And in year 25, the portfolio climbs to $429,156, and the annual dividend income reaches $38,979, translating to approximately $3,248 per month. Second to last on my list is Sabine Royalty Trust, or SBR. Unlike most traditional stocks, SBR pays dividends based on royalties it earns from oil, gas, and mineral production. This means that instead of running energy operations, SBR collects money when energy companies extract resources from its properties. This setup makes SBR more stable and less risky compared to energy companies directly involved in drilling and production. SBR is an excellent way to diversify your portfolio if you're looking to include natural resources. Its focus on royalties allows you to benefit from energy production revenue without dealing with the ups and downs of operating costs in the industry. The stock pays a 4.16% dividend yield, with dividends growing at an average rate of 8.13% per year. It also has a 4.1% average share price growth, meaning you not only earn regular income but also see your investment grow over time. Here's how your investment could grow if you contribute $90 a week and reinvest all your dividends. By the end of year 1, you will have $4,680 saved up, and the compounding process begins. By year 10, the portfolio grows to $72,545, generating an annual dividend income of $3,661. As the reinvestment effect accelerates, by year 20, the portfolio reaches $297,935, paying an annual dividend income of $22,888, which translates to about $1,907 per month. In year 23, the portfolio value climbs to $453,336, paying an annual dividend income of $39,040, equating to roughly $3,253 per month. 7 years faster than Maine, number 5 on today's list. Finally, last on our list is First Trust Buy Right Income ETF, or FTHI for short. This is an exchange-traded fund that invests in a variety of high-quality stocks while using a covered call strategy. This strategy generates extra income by selling options on its stock holdings, which helps maximize returns. This makes FTHI a standout for investors who want both regular monthly payouts and the chance to grow their investment over time. What sets FTHI apart is its balanced approach. It provides a high dividend yield of 8.5%, one of the best in its category, alongside a strong dividend growth rate of 9.43%. This means your dividend payments not only start high, but also grow year after year. Its 1.21% average share price growth, though not the highest, adds another layer of value, ensuring your investment appreciates steadily over time. Here's how the numbers look if you consistently invest $90 a week into this monthly stock. By the end of year 1, your portfolio will be at $4,680. By year 10, the portfolio grows to $95,516, generating an annual dividend income of $13,264, or about $1,105 per month. The real magic, though, happens in year 14, when your portfolio value reaches $240,600 and your annual dividend income jumps to $44,818, equivalent to $3,735 per month, enough to cover rent. And this stock does it in half the time it took our number 5 pick to reach the same goal. So obviously, that brings up the question, should you and John go all in and invest all your money in FTHI? Well, the simple answer is no. Even though it's the fastest way to reach the $3,000 monthly income goal, it's also the riskiest. FTHI can underperform in strong bull markets because its covered call strategy limits its growth. It can also struggle during high times of market volatility when the options income isn't enough to offset falling stock values. So what's the solution? In one word, portfolio. By combining all the stocks we've discussed in this video, you can create a portfolio with a starting dividend yield of 5.9%, a 10-year dividend growth rate of 6.4%, and an annual share price growth of 3.21%. This balance gives you both steady income and long-term growth. Here's how the portfolio grows with a weekly contribution of $90. In the first year, the portfolio will be valued at $4,680. By year 10, the balance reaches $75,943, while annual dividend income rises to $5,023. The effects of compounding become more evident by year 20, when the portfolio value reaches $333,871, and annual dividends grow to $30,960 or $2,580 per month. 1 year later, by year 21, the portfolio achieves its target of exceeding $3,000 in monthly dividends, generating $36,913 annually with a total balance of $385,671. Here's how the timeline looks for each stock as they reach $3,000 per month in income, starting with the longest timeline. Maine takes the longest, reaching $3,256 per month in year 30, highlighting the power of compounding dividends over time. Realty Income comes next, hitting $3,319 per month in year 28 with its steady real estate payouts. DHS achieves $3,248 per month in year 25 thanks to its diversified approach to high dividend stocks. SBR reaches $3,253 per month in year 23, leveraging consistent energy royalties. And the fastest of all is FTHI, which reaches $3,735 per month in year 14, demonstrating strong early growth but with higher risk. The portfolio, however, stands out by reaching $3,076 per month in year 21, faster than all but FTHI and much safer. By diversifying across all 5 stocks, the portfolio spreads risk while balancing income and growth, offering a reliable and steady path to achieving the $3,000 monthly income goal. Want to know how to turn $10,000 into a $2 million portfolio using Fidelity Index funds? Click the video on the screen to find out.